All right, welcome back, YouTube. So in today's video, I'm going to give some of my thoughts on what's been happening over the last few days, and also where we are as far as the state of the market for Dogecoin as of right now. I'm going to start with some of the current events. I'm going to release a long form of this weekend. I've been doing a lot of research over the last couple of days, but I didn't want to just relay something that I talked about over a year ago. I think it's important that I kind of go over it again because it's extremely important as far as to understanding how crypto works and more so how brokerages work. And I'll start by saying the reason that I wrote those long form messages on shorting and what brokerages do with your crypto, and the reason you should move them to your own private ledger, or not, excuse me, not necessarily ledger, but that's that's what I use, a ledger, but your own private wallet, is when you think about a brokerage and you say, okay, well, it's similar to a bank as far as how it functions. If the brokerage is not charging you money to on a monthly fee or something like that, they have to. Well, I think it's important to think about how they're generating revenue. Nothing just exists, and I think that a lot of times people just, as long as they get their crypto, they're fine. They don't really think about the logistics behind it, and I think that it's something that cannot be ignored when you're thinking about what's safe, quote unquote, and where should you hold crypto if you're looking to hold some on a brokerage. And you have to think about how they make money. And I'll just say this as well. I don't think that if any of your long-term crypto should be held in your own private wallet. Now, I don't understand some people trade and stuff like that. So obviously, yes, that has to be on a brokerage for accessibility reasons and stuff like that. But your long-term portfolio, your Doge, Bitcoin, Ethereum, whatever you're holding for X amount of years, X amount of cycles and stuff like that, there's no legitimate reason for that to be accessible by any brokerage. And I think that, it's comfort, or people are just afraid of missing out on like a huge spike or something like that. And they kind of just, I don't say get lazy, but they don't put the effort in to protect their investments. That's the biggest plus that you have in crypto outside of tracking where crypto goes and being able to track wallets and stuff like that. You have the ability to move your coins, or at least protect them with your password and stuff. So that's something that needs to be utilized. But and going back to my topic here, when we are doing this and not protecting our assets and leaving them on the exchange, for example, we need to think about how these exchanges make money. And you can use the banker example. Yes, some exchanges lend coins out for shorting and stuff like that to make money on the spreads. And then, yes, some of them also use them to create pool accounts and trade with them or invest with them. And you have to read the fine print. I did some very thorough research a while ago, and I put up even like tabloids and exchanges like Gemini and stuff like that, saying that, hey, look, if you give us once your coins are on the exchange, if they're on there, that's a loan to us. We will pretty much do with them as we please. And, in the event that, we go bankrupt or we make a mistake, you're SOL. And a lot of TOS, terms of service agreements, are like that. It's that little thing that, it's the little thing saying agree to the terms. And it's like 100 pages that nobody ever reads. You just kind of scroll to the bottom and you hit agree. Yeah, it's in there somewhere, but most of the time it's in there saying that, yeah, as long as your crypto is on our exchange, we own it, and it's basically a loan to us. And if in the event that something happens, we don't have to pay you back, or there's a legitimate, not legitimate, but there's a format as far as to how that structure goes about getting paid out. So it's similar to like if a company goes bankrupt in the stock market, you are like a low class shareholder. So you have like people have higher prioritized debts that get paid out first from like the liquidity, i.e., your liquidity that they're using to sell. And so I want to kind of just think about this as like a business standpoint. So if the brokerages are not charging you a monthly fee to be on there, they're charging a little bit of like a transactional fee, or you got some slippage or something in there, and they get a little spread off of that. That's not where the revenue is coming from. You have to think about, okay, they're putting up all these billions of dollars in assets and stuff like that. So they're either counting your assets as theirs, and depending on which brokerage that you're on, technically they can do that, or B, they're pulling it, shorting and stuff like that to create these spreads to generate additional cash flow. And if they are, it's of no benefit for a brokerage to be your wallet for free, right? I think that's sometimes what people don't think about is when they buy their coins and they let them sit on the brokerage, you're basically using the brokerage as your wallet. And it doesn't make any sense for them to be your wallet for free unless, at least for the most part, especially when they have access to all that capital, they typically are going to want to, leverage it. Leverage is the thing that kills most businesses, most people. Leverage, the ability to leverage. So, and not to mention, I don't even want to go down that rabbit hole of us not having regulation and stuff like that. That's a separate video by itself, but they can pretty much get away with murder. And they file for bankruptcy. And then, like I mentioned earlier, the way they prioritize the debts and stuff, you'd be lucky to get anything, if ever, back. So, don't make a donation to your exchanges. The most important thing that you can do now, even before this happened, and as this is happening, and even going forward, is to own your coins. Make sure you take advantage of the ability you having to limit the access that you have to your coins and get you something like a ledger. It doesn't have to be a ledger, but anything that you have, you can put a key phrase on and stuff like that to protect it. Typically will be okay. It's known as like cold storage, cold wallets and stuff like that. But if you have the ability to put some type of protection so they cannot be accessed, that's going to be your best bet. I use Ledger. I have a link for them in the description if you want to get them. And also, while I'm mentioning the link in the description takes you directly to Ledger's website. Go on Amazon or like eBay and stuff like that and look at some of the comments or the ratings and stuff like that. You'll see that people get scammed by getting these third-party wallets and stuff like that with spyware and all that kind of stuff already updated. So wherever you get your wallet from, make sure that you're getting it from the actual source. Don't get third-party wallet. There's a million ways to get scammed in the crypto community. And that's certainly a way of getting, some used wallet or some wallet from some sketchy company or something like that. And you upload or put your information on there, and next thing you know, all of your accounts are vacuumed out. So just kind of be, careful with that and make sure that you're getting your wallet and stuff like that from a reliable source. So in conclusion of this statement, before I look at the charts and stuff here, make sure that you are splitting up your assets. If you are strictly a long-term holder, in my opinion, I can't tell you what to do, not financial advice, don't hold any of your crypto on an exchange. If you're trading, whatever you're trading, I know it's easy to have everything there, or you feel like you're going to miss a spike or something like that. Everything runs in cycles. It's not necessarily a spike that you're going to miss. If you're looking for spikes, then more than likely you're trading or trying to do a swing trade anyway. So, that can be a portion of your exposure. But if you're long-term, like most people say they are, and what most people are, it's in the realm of their speculation, then you need to have those coins off of the exchanges for your protection. And yes, and if that is not enough to convince you, you're saying, oh, what if it takes me too long to transfer it back to sell or something like that, and it's not at my price point? Well, losing 10%, 15, 20% or whatever, if it's just a spike on the time it takes you to transfer, is better than zero from when the exchange defaults and takes all of your crypto. So if at worst case scenario, let that be your motivation, right? So looking at the charts here, we got a rejection here right off of our 709 mark. And this is, if you follow my videos, we're in gap up territory. So this is going to be a lot of extremely volatile time as far as for swings until we build support and get a direction for movement. Now it seems like there's an endless amount of FUD coming out about FTX. So this can go on probably for a few more days until I'm going to say it becomes old news. But as of right now, every day it's just something new. First it was, his net worth went to 900 million, then it went to zero, and then it was worth $1, and then now he's stepping down. And now there's this thing floating around Twitter saying that it was 10 people living together and they were all romantically involved. And he took the money from here and put it in another company. It's just, as long as that spend is out there, it's going to be difficult to get a direction, because it's like, okay, who has exposure to this? How many other companies are like that? This is, a lot of fear is driving the market. So fear never translates to pushing the market up. It'll either go down, or you'll have like a kind of like a static movement. And especially with the range that we're in right now, we can certainly see these swings here, because it's not any um, penetrative support, unless we're down here at around like 7 cent, and then we got a few rejections here off of the 9 mark. So that's a pretty much like a 2 cent range between what we're bouncing in right now, and even on like our last couple of cycles, we've gapped both of them. Literally 3 times we've gapped both of them. So that's the range that we're going to be in now. If you are looking to accumulate, like I've been doing in like my research, I've said that this range in between these 3 bars here has always been the best. So if you're able to get it down here as close as possible, if you're looking to capitalize to catch like the next swing up, or just to get your DCA down for your long-term holds, the closer you can get to down here is the better. But ultimately, we're going to see if shorts or some additional information is going to come out that can cause some fear. But it's not been decided yet as far as what direction we're heading. I'm going to check the shorts here really quick. Why is my screen? What is that? Go away. Yeah, so nothing concrete here from the shorts. Let's see. Yeah, so 2.2% today. So yeah, nothing concrete moving here. And that's another thing too. They're not taking advantage. And this is what I meant when we first had that breakout, when Elon purchased Twitter. And I said that shorts are probably going to behave a little differently now. That's because we have a long-term catalyst. And it's not as easy as price manipulation, because like 6 months ago, 7 months ago, this type of news, they would have been able to, they would have took advantage of it to kill the momentum and drive the coin down, or at least take advantage of trying to push it down further. So now we're seeing very minimal movement. And I think that that's just because Doge does have the ability to break out on its own, but it's just that because the market is so scared right now, and we're threatening crypto freezes across the board and stuff like that, it's just going to be for like a few days until we find like a footing here in a different direction. But I do believe that if you are considering buying additional coins and stuff like that, and you don't have a wallet, and it is in my firm opinion, take that money, some of it, and get yourself a wallet. I don't think any of the, I don't want to say I don't think, but I don't trust any of the exchanges. I don't care which one it is, as far as to holding the crypto that I'm long-term in, because things can change, right? Things you can read the TOS and do the terms of service and all that kind of stuff like that. You can go over as far as how they're investing the money, or if they are using leverage. You can do all that fun stuff, but it really just comes down to like the state of the market, and if they have the additional capital there, or if there is a pull, or if they have to, if they leave a error, not error, but if they leave a contingency in the contracts and stuff like that, and the TOS saying that, okay, in the event of there's a liquidity squeeze or something like that, we can raise liquidity from here, anything like that. It's just too risky for me. So again, you're going to have to make your own decision, but I do think that it is in the best interest of the community as a whole and individually to have your own wallet, because I think that what we're doing now is this is setting the perfect stage for the Fed coin, for the government to come in with these regulations and stuff. And I do believe that we need some regulations, but they can come in and kind of kill this whole notion of decentralization and alternative currencies and stuff like that, and try and push us toward a Fed crypto dollar or something like that. And I have a bunch of videos on that as well. And I think that everything that we've talked about over like the last year and a half is starting to unfold in front of us. So we have to make sure that we're doing the right thing and make sure that we're protecting ourselves in this time here, because ultimately, yes, I know sometimes these swings or these random events, they suck, but you also have to keep in mind that you are a pioneer in a new industry, and you're literally it's not a paved road, right? You're literally walking through the woods, cutting down trees, tripping on stones, you're laying the road as you go. And so that's pretty much what we are in the crypto world. We're pioneers. So we have to kind of keep that in mind here and say that, okay, yeah, there is going to be some unexpected things happening, now and in the future as we get to where we want to go. So I'm still a believer in crypto, definitely still a believer in Doge and the community and for us long term. So I think that this is, just one of these obstacles that we're kind of going to have to overcome and have that crypto consolidation. I made a video on that about a year or so ago. Please check it out. I talked about the consolidation of cryptocurrencies and the consolidations of exchanges, because I do believe eventually we're going to get to a point where it kind of mirrors the stock market setup. There's not a million market makers in the stock market, and there won't be in crypto as well. I know a lot of these exchanges kind of popped up overnight, and you see they're disappearing just as fast. So we're going to see that consolidation on both sides here, I believe. So with that being said, let me know your thoughts about the last couple of days. Let me know if you have your crypto on an exchange or in your own private wallet. And also check out Moomoo. I have a private link for them in the description section where you don't have to worry about getting your information sold. And they offer payment for order flow free trading. I have a link to get up to 15 free stocks. And also, if you want my trades for the week so that you can make money every week along with me and other members of the group, I have a link for my Patreon in the description section as well. I appreciate all of you. Thank you for all your support, and I'll see you in the next video.